think that might be the wrong one. Which one am I doing? Uh, let's go back to KHRNF. What's good, YouTube? This is Pursuit of Freedom. Wanted to go ahead on and do this here video. Might have time to go get it. You're looking at KHRNF. That's Keyron Life Sciences. Now, this I'm doing a trade review on this one. I'm a little late, but I don't think it's a problem with that because sometimes, hindsight is 20/20, and you can look at a judgment call that was made in your trading. You know what I'm saying? Days ago, and look at what happened after. So I traded this thing on the 6th. This is Keyron Life Sciences. So I was in at 151. This is my E-Trade. This is just a screenshot I took from the E-Trade. That's realized. Minus 26 bucks. 450 shares. 151 is where I got in. 147 is where I got out. Tight range. I don't really believe in letting the ticker tick against me. I'm buying this thing for an extremely specific purpose. You see my in and out commissions to a total of $9.96. Small account, trade size was 684, shrunk it down to 657. So it wasn't a bad loss. And I could still consider this a good trade because using the 15-minute chart on the left, squeeze out my secret sauce. Still didn't do a video on that, a good one. On the 6th, not sure of exactly the time frame when I got in, but my guess would be I got in early, looking at this thing, getting ready to break out. I'm in at 151. So you got in that first candle, it reaches up and touches this 158, which was a resistance on this daily chart way back over here, 925. So it took, 2-3 months for this chart pattern to get back up to that resistance that it set in September. And it kind of slightly broke above it because the resistance was really 154 and it reached a bit above it and touched 158. So that was just a brief false breakout above this old resistance level. You know what I'm saying? So I'm doing this video on the 18th. This trade was made on the 6th, as I think I've already shown. In and out, both in and out on the 6th, so it was a day trade. Hey, I'm finally really practicing day trades. I think for the most part in my beginnings, I would want to day trade, but my reaction time of getting out of a trade was slow. And I would find myself sipping on a glass of that hopium, some opioid, some hopiate and whatever, hoping that the stock was going to come back. And I probably would have held through this downtrend and had to wait for another uptrend, as it looks like it may be starting to do now. But what I like that I did in this case was I got in this first 15-minute candle. It dipped beneath the VWAP. Well, watching the market and watching stocks after stocks after stocks, and what typically happens, the volume weighted average price, some traders say they do not follow it, but I see it as a key indicator of what the price action is going to do, especially when it comes towards bearish trends. Like I almost would be trying to get short a stock once it dips beneath the volume weighted average price. I mean, that would be my short strategy almost, or even, the 13 EMA or the 9 EMA or the 4 EMA, which I got three short-term, three long-term exponential moving averages on my charts, just watching how the price action chops between them, right? Because I studied underneath one that taught me the 13. Another that I follow watches the 9. I threw the 4 on there to just Just I want something even closer to the price action. But anyway, I get out of this trade over here, probably right at the top of this candle as it's breaking beneath and finna come crack down even more, getting further away from the volume weighted average price, which to me is always a sign that a stock is about ready to call it quits. And you look at this stock for the rest of the day, the rest of the sixth, it didn't even get nowhere near the volume weighted average price. By this time, I'm already out the trade over here at 147. You know what I'm saying? At like 11 a.m. at the latest, I'm out of that trade because I'm really aiming at the first hour of the day. So the first hour of the day would have ended in this candle. Probably could have got out at a high of 152, 151. Could have got out at the same price where I got in, but I think I didn't. I think I seen this thing dipping down all the way down here to 147, and I got out right there, thinking that the next candle it was going to blow lower. And I missed an opportunity to get out at exact break even. But it is what it is. It still was a small loss instead of what looked to be an even bigger loss. So look at the seventh. You got the stock price briefly gets above the volume weighted average price, cracks beneath it, doesn't return until late in the afternoon. Let's look at the eighth. Plays with the volume weighted average price, and that's that yellow line on there. Plays with it a little bit, hovering above it. Once it gets thoroughly beneath, it don't do nothing until the price barely gets above this thing on the ninth, and then you get a break above the volume weighted average price, which might be a sign that the bulls are getting ready to buy in. It's getting ready to take it back over. But that's not until the price falls to 123. So I don't want to wait on this thing because I don't believe in it. I was looking for a very specific thing to happen on my daily chart, a break above 154, 158. That didn't happen here in this case. I got out, small loss. That's part of trading, this pursuit of freedom, showing the ups and the downs, the good with the bad, trying to really lay this thing out all the way through. This pursuit of freedom.